Close your eyes and imagine the 2 a.m. glow of a trading monitor.
Your eyes are bloodshot. Your heart is racing with every tick of the candle, and you're fueled by nothing with cold coffee and the desperate hope that the market won't gap against you at the open.
For decades, this was the ritual of the retail trader, a David versus Goliath battle where the individual is armed with a slingshot and the institutions have heat-seeking missiles.
But what if the slingshot was replaced with an autonomous silicon-based intelligence?
What if you didn't just trade, but instead sat at the helm of a digital investment bank that never sleeps, never panics, and never makes an emotional mistake? Today, I'm pulling back the curtain on a system I built using 3 distinct AI models, a trio that has fundamentally changed my financial trajectory and achieved results that, frankly, shouldn't be possible for a single person. Stop watching the charts. Start building the architect that watches them for you. Act 1. The exhaustion of the human variable. We must begin by addressing the fundamental flaw in modern finance, the human biological hardware. Our brains evolved on the African savanna to detect movement in the grass, not to calculate the implied volatility of a 0-day to expiration option. When we see a red candle on a screen, our amygdala triggers a fight-or-flight response, releasing cortisol that clouds our judgment. This is why most retail traders buy high out of FOMO and sell low out of fear. In the high-frequency world we live in, human intuition is no longer an asset, it is a liability. The digital investment bank concept was born out of a realization to survive the modern market, one must outsource the execution to entities that lack a pulse. This isn't about a simple buy or sell bot. It's about creating a hierarchical structure of artificial intelligence that mimics the departments of Goldman Sachs or BlackRock, all running on a single workstation. Act 2. The history of the Silicon Edge. To understand where we are going, we must look at where we came from. In the 1980s, Jim Simons and his team at Renaissance Technologies proved that mathematical models could extract alpha, excess return, from the market's noise. For 40 years, these quants have been the secret masters of Wall Street, using vast server farms to front-run the world. However, the barrier to entry was always data and compute power. Today, that barrier has crumbled. The democratization of large language models and machine learning frameworks means that the same logic used by the Medallion Fund is now accessible to anyone with the curiosity to code it. We're entering the great democratization of financial intelligence, where the individual can finally compete with the skyscraper. Act 3. The Trio, the architecture of the digital bank. My system is divided into 3 executives. The Macro Sage, a large language model fine-tuned on financial linguistics. While you are sleeping, the Sage is scanning thousands of news headers, Federal Reserve minutes, and even the sentiment of social media whale accounts. It doesn't look at price, it looks at the why. It calculates a global sentiment score that dictates the bias of the day, bullish, bearish, or neutral. It understands that a shift in the Japanese yen's interest rate is more than just a number. It's a tectonic shift in global liquidity. The second executive is the quantitative hunter. This is a machine learning model trained on 20 years of price action across multiple asset classes. It uses Fourier transforms and hidden Markov models to identify cycles and patterns invisible to the human eye. It doesn't care about news, it cares about the mathematical probability of a mean reversion. When the Sage says the wind is blowing north, the hunter finds the specific ship that is ready to sail. The third, and perhaps most important, is the risk general. This is a reinforcement learning agent whose only job is to protect the capital. It applies the Kelly criterion to every position, dynamically adjusting stop losses based on real-time volatility. It is the cold, calculated voice that says, even though the sage and the hunter are confident,
The tail risk is too high. Scale down.
This checks and balances system ensures that no single point of failure, technical or logical, can wipe out the portfolio.
Act 4. The Battle Room, a case study in execution. Let's look at a recent market event, the sudden volatility spike in the tech sector last quarter.
A human trader would have seen the 3% drop in the Nasdaq and panicked, perhaps selling at the bottom or doubling down in a revenge trade. My digital bank reacted differently. The Sage detected a specific change in the wording of a Fed governor's speech 3 hours before the dump. The hunter identified a historical liquidity trap pattern forming on the 15-minute chart. The risk general immediately cut the long exposure by 40% and opened a hedge in the volatility index. By the time the crash hit the headlines, the system had already neutralized the loss and was actually net positive. The results over the last 12 months have been staggering, not because of some holy grail indicator, but because of consistency of logic.
The system has achieved a Sharpe ratio, a measure of risk-adjusted return, that is triple what I achieved as a manual trader.
It isn't winning more, it's losing less, and losing with dignity.
Act 5. The philosophical shift. We are standing at the precipice of a new era. The digital investment bank is more than a tool. It's a philosophical shift from active participation to architectural oversight. In the future, the most successful investors won't be those who can read a chart, but those who can manage a suite of AIs. We are moving from the era of the day trader to the era of the system sovereign. This doesn't mean the risks are gone. Market dynamics are always evolving, but it means we are finally fighting a fair fight. You no longer have to spend your life staring at candles.
You can spend your life building the system that understands the fire.
The era of manual trading is ending. While others are still trying to guess the next move of the market based on gut feeling, the digital investment bank is calculating probabilities in the background of their lives. This isn't a get-rich-quick scheme. It's a technical evolution. If you're ready to stop being a pawn in the market's game and start being the grandmaster, it's time to put down the mouse and start opening the IDE. The future of wealth isn't found in the charts. It's found in the code. Welcome to the age of the autonomous investor. Are you ready to build your bank?